So here we are, another Saturday session. Good evening, everyone. We are on the 22nd of Feb. It's just 2 minutes past 4 o'clock. We are looking at the Nifty from three different time frames: monthly, the center is weekly, and the right one is daily. And the weakness continues, isn't it? Let's first closely understand what's happening with the Nifty. This week that just went by, the last 5 days, essentially, if you take a look at this top corner on my right hand side chart, is essentially a 5-day consolidation, range bound, price wise, not price wise, time wise activity. That is primarily because recently there was a directional activity, directional move, non-directional move, trending market, trading markets, non-trending markets, range bound markets. After a directional move, there will be a non-directional phase. So the last week, the last 5 days was essentially a non-directional phase for the market because there was a directional phase earlier. This is number one. This non-directional phase, or the consolidation, congestion, whatever we call it, is happening very, very close to the previous low from where the index managed a decent bounce back recently. The recent bounce back has completely been retraced and the index is buying time right at the bottom, which means that it's just knocking for a breakdown. It's just waiting for a breakdown like this. Or will the supports hold and the index will finally create a double bottom kind of a formation? That needs to be seen. We neither have a breakdown nor do we have any signs of reversal. If I take a look at the largest time frame on my chart, that's the monthly chart is going through a 5-month correction. Consecutive 5 months. We are on the 22nd of Feb and just a week to go. I don't think this index is going to reverse to a positive month. Unlikely. Anything can happen. But 5 consecutive negative monthly closes from the Nifty is something that you haven't seen. So selling pressure, weakness, overall negative sentiment, whatever we call it, is very much there. And on the monthly time frame, we are going through a pretty decent correction. In terms of time, it is taking 5 months. May not be a very, very sharp fall like we saw in COVID or during Jan 2, 2008, October, but not those kind of falls, but a pretty decent structural fall. So we shouldn't take this lightly. It's not like a bull market coming down for a month or two and bounce back. It's not like that. So the monthly charts are slowing down. The weekly charts are going through their two-legged correction, leg number 1, leg number 2 on the downside. You can call it A, B, C. Our momentum indicators are not suggestive of any kind of divergences whatsoever, nothing confirmed yet. If you take a look at the weekly candlestick, it's just a star, like a doji, right at the bottom of the last week's foothills. Now, will this lead to a morning star? I don't know. But I know one thing for sure, that going forward next week, that we are heading towards, and we have the derivatives expiry, monthly expiry also, you have to keep an eye on last week's high. It needs to cross last week's high for any form of a meaningful bounce back. I'm first talking about the bullish side, if the market bounces back. So your first level should be last week's high. Now it's not too far because last week was a very, very quiet week. It was a range contraction. Heiken Ashi has moved down to a negative Heiken Ashi again. So overall things are not that great. It was a time pass of a week. It was a doji, very, very small range. We need a range breakout on the upside for any meaningful move, or else this market can easily fall because the sentiment is weak, the trend is weak, the momentum is down. So it doesn't need anything more for it to make it fall. Falling for this market is easier than the reversal. And if the reversal comes, which is difficult, we need to have some levels. And that level is last week's high, number 1. Not only just a level, last week's high, if it crosses, it needs to close above. We did see this in the recent week, last week that just passed by. We did see that on a day-on-day basis, charts moved up but could not sustain. That should not happen. So Nifty takeaway, Still down, still very much weak. Buying time. If the last week's lows are broken, expect further downside, and wait for the weakness to show us some signs of selling exhaustion, selling slowdown. Is it there? No. So we wait. Just because it has consolidated is not a good enough reason. The mid cap, the small cap, and CNX 500. Now, CNX 500 did manage a decent move compared to the Nifty. You can see it's not a horizontal range bound movement. That's primarily because of the way the small cap and the mid cap had moved. The small cap and the mid cap both had given an angular, a proper bounce back kind of a move. Nifty was completely horizontal. But if you take a look at the small cap, this is the mid cap chart. Monthly charts are still very much down. Weekly charts are very much synced on the downside. And we have a bounce back, and it's been testing the previous high. So as of now, it's just a bounce back and nothing more than that. So the CNX mid cap and the CNX small cap has helped the 500 to give you a minor bounce back, but they do not have any very strong signs of reversal yet, not yet. Between the mid cap and the small cap, though very, very weak, if I take a look at the weekly and the monthly charts, I have a structural divergence between the trend indicator and the momentum indicator. So if what we saw last week, small and mid caps doing marginally better than the large caps, if the markets do not fall, this kind of an outperformance may continue, because there are mild signs that the mid cap, small cap, especially small cap, probably will try to bounce back a little bit more. All depends on the market sentiment, because the gift closed at, I think, 22,792. The futures closed at 822, not significant, some 30-40 points. It can lead to a further weakness on Monday morning. So small cap tad better than how the Nifty played out. Now let's come to the sectoral charts. This is the interesting lot. And for this, from last week, we have started considering RRG graphs on the weekly time frame. I think that makes more sense. And the count, I would suggest that why don't we keep the count in terms of the number of weeks since the top. So let's consider all these weeks, then we will be able to make some sense. So if I count, and I can just use this tool to make the count from this point all the way from this week all the way till the current week, we have around 20 weeks. This is on the weekly chart, so 20 weeks. Going back to RRG graphs, earlier I used to use stockcharts.com. I've shifted to Strike. Always better to use Desi softwares. 20 weeks. So many sectoral thematic charts are not needed, so I'm going to reduce them. So 20 weeks on the weekly time frame, that's my range, decided. And over here, I'm going to reduce the number of sectors. So commodities, infrastructure, healthcare and pharma are more or less very, very similar. I'm going to take one out. Media is not necessary. Energy I can keep. PSE, CPSE, 50 next. Realty, let's keep realty. Small cap 50. These are all not needed. So rather than keeping so many sectoral and thematic indices, it's better that we focus on the key ones. Total market 500, large cap 200, 100, consumption. Okay? Is that okay? This software helps us to sort it in terms of tail, and within the tail it sorts the percentage change. It would have been great if it had sorted across the list of the sectors, but if I understand correct, it only sorts within those tails. The only, based on RRG graphs, the only sectoral index which happens to be on the leading quadrant and improving like this is the private bank. Okay. With the private bank, I will take a look at the bank Nifty, which is clearly has shifted down from the leading quadrant to the weakening quadrant. With that, I will add the PSU Bank. Now, PSU Bank, though was improving a lot, could not go to the leading quadrant, came down all the way down to the lagging quadrant. It's important when you understand Bank Nifty, it's very important you break it down between the privates and the PSU. The private sector banks enjoys a much higher weightage than the PSU banks. PSU banks are very skewed to just one or two names. So overall, you have the Bank Nifty, which is in the weakening quadrant. You have the PSU Bank, which was showing improvement over the last, couple of months back, but then things have turned bad. And the private banks is trying to show you some strength. That's the same. I think now, if we go back to our charts, we'll try and make some sense. It's an important index, it's an important pocket. I think 40% weightage comes from here, the banks as well as the financial stocks. If you remember last week and going forward, we've been looking at Bank Nifty very closely, especially the weekly chart. Because on the weekly chart, we had a downtrend and a down momentum, a short-term bounce back, which was retesting the previous fractal lows, wherein erstwhile supports were there. And our curiosity, our question was, will this zone act as a resistance? For that, we would like to see a break below last week's low, something like this. If I take a look at last 2 weeks price action, yes, the Bank Nifty has slightly been angling down. Again, a very much like a doji spinning top close to last week's low. All those things are consolidation, but it is clearly giving us signs that this erstwhile support zone is offering us resistance here. So for the Bank Nifty, this is a very, very important level. For any kind of upside, it has to go above that or else it's not happening. Number one. Number two, what are the markers? Trend indicator down, momentum indicator down, monthly charts, both of them are down. So it seems like, yes, this support is turning to a resistance and we are headed further down. Let's say we are headed further up. Are there any signs of that? No. So because there are no signs that we are headed further down and most of the signs are negative, it is meaningful to anticipate that we are headed down. Unless the markets just turns on a dime. So Bank Nifty is a weakling here. Bank Nifty is showing signs of weakness. Come to the daily chart. We had a fantastic bounce back from the Bank Nifty, from the auto. Both these sectors did pretty well, but auto has given back. Bank Nifty is also giving back most of its gains. Daily charts are not supportive. Weekly, monthly charts are not supportive. I think we are headed down for the Bank Nifty. If that's the case, next I'm going to take a look at the Nifty Private Banks. And the Nifty Private Bank will kind of mirror what we just saw on the Bank Nifty. This is that zone wherein we had some erstwhile supports. This is exactly the level from where we are seeing some resistance. Now, Private Bank, if you take a look at the candlestick charts, then you will notice that it has not broken as much as the Bank Nifty has. So going forward, the week ahead, if you see a breakdown of these lows, you can expect private banks to weaken. That will in turn weaken the Bank Nifty further. Our RRG charts were suggesting that the PSU banks were anyways weak. Let's take a look at the PSU banks chart. Yes, it is weak. Be it the candlesticks of the Heikin-Ashi, trend and momentum, it's been predominantly weak. Last week we had a move. Last week with the market we had a move. But consider this more like a bounce back. So the most important high weightage sector, the banks and the financial, especially the banks, are looking weak. What about the finance? It's important and should be added. And finance more or less mimics the similar kind of a feeling. So going forward, next week, if we see a follow through weakness from the Bank Nifty breaking below last week's low, quickly check if the private banks is breaking that low or not. You can quickly check if the financial stocks are breaking that low or not. Then those who trade derivatives should know where to look for shorts. This is where you can look for shorts because the readings are very, very evident. A complete opposite flip side of this story will only play out if last week's, or not even last week's, last 2-3 weeks high is crossed. Till then, it will not be a very smart move to buy, especially the privates and the Bank Nifty, the private banks and the Bank Nifty. Okay. After the banks, the next most important sector is IT. But what I'll do is I will go by the RRG graph and I focus on the improving quadrant. By the RRG graph, in the improving quadrant are those which are slowly picking up relative strength. In this falling market environment, relative strength will come with less fall. It's a downtrend. Most of the charts, most of the sectors, most of the stocks are falling. How will the relative strength come? The relative strength will come when any particular sector is falling less than the benchmark. Okay, so we have over here three charts. We have oil and gas, we have FMCG, and we have auto. All of them are turning around from weakening to improving. FMCG, oil and gas, and auto. Starting off with oil and gas. Your oil and gas essentially are your Reliance, the OMCs. If you add on the energy, you will have the NTPC, ONGC, Coal India, all of them can be combined there. So I have the CNX energy over here. And we know that it has been going through a emphatic strong downtrend. There was a bit of a touch of a divergence happening, which has led to a bit of a small term bounce back last week. Not bad. Not bad. So far, so good. We had marked the fractal lows in one of our classes, but they are not relevant anymore. Now, the point is, in the recent past, bounce back number 1, 2, 3, a little bit here, and this is probably the fourth bounce back. Will it sustain? Now, higher time frames, sorry, are not supportive. So if the daily charts have to sustain, then the next move after a move up, when you get a move up and when you retrace, let's say 50% you should not give back. Let's say that when you retrace, please do not retrace more than 50%, or else it will be difficult to act bullish on it. We have a trend momentum sink on the long side. In the past, whenever it had happened in the past, recent past, it never sustained because the overall market was weak, which means the index has just given a small bounce back. From a trader's point of view, will it sustain? From a trader, short-term investor's point of view, should I look to buy? Wait. For what? I would wait for this up move to sustain, which did not sustain here, here, or here. What are the signs? When it retraces, the trend should remain intact. When it retraces, it should not retrace too much. And after it retraces, it should show, it should show me signs of improvement. So at least let this wave go, let the next correction comes. And if the high of this next wave is taken out, this is where you can start to act a little positive. Till then, wait. So you can keep this pack on your watch list and look for those stocks which are forming this kind of a setup. So this is where maybe if the market sustains, if the market doesn't crack, some pocket of strength, not strength is not the right word, a relative outperformance from a short-term point of view, we can get. The other two were FMCG and auto. FMCG, and I say heartbreaker. This was heartbreaker completely because FMCG's bounce back was the most sharpest bounce back, followed by the one in auto, and the Bank Nifty and the financials also bounced back. Heartbreaker because the way it completely gave away. So this kind of a move was used to exit, liquidate, go light on that pack. I have a long-term level marked here. The index is right there. When the index comes close to such important long-term levels, I personally would like to see signs of bottoming out. Signs of bottoming out means signs of selling slowdown, maybe some kind of a price momentum divergences, maybe some good looking candlestick, something. Monthly, something? No. Weekly, something? No. Daily, something? Not yet. Stay away. Yes, it's down. Yes, it's beaten down. It's underperforming clearly. No, price is not giving me anything to fall back on. Why try and pick the bottom? Stay away. What about auto? Auto's move was also impressive, but then 100%, more than 100% of it has got retraced. Same logic I will apply here. That do I see any kinds of signs whatsoever? The answer is no. Monthly, weekly, daily, stay away. There's one liner that I've started using for the last couple of weeks. That is too late to go short, too early to go long. So your auto, FMCG falls exactly in that pocket. I think it's too late to go short now. It's important, it's meaningful, you sell on a rise, right? You'll get a better risk reward in your favor. So too late to go short, and there's nothing on the charts based on which I will go long. So too early to go long. So I need to give these charts a little bit of time. Okay, what about the next quadrant, which is weakening? So this is where we have consumer durables. It's been in the weakening quadrant for quite some time. You have the pharma, clear classic signs of weakening from leading to weakening. We discussed Nifty Bank, that's Bank Nifty and financials, and we have IT. This can be a concern. This can be a concern because IT enjoys the second maximum weightage after the banks and the financials. So we have IT, consumer durables, and pharma to deal with. So let's start with IT. What is IT charts telling us? IT will be relatively better looking when you take a look at the monthly chart. The dollar factor is important. It has been supportive. In fact, same goes for pharma also. If you take a look at the pharma charts, they are not as bad as the rest. So dollar, USD INR, the dollar factor has supported pharma and IT, but structurally they have gone through a decent correction. Okay, we are on pharma, so let's get done with pharma first. Monthly charts are just slowing down. Weekly charts are in a downtrend. Daily charts have just opened up. Remember, I think on Wednesday it gapped down, went up, and Friday it fell pretty hard, almost 2%. So clear signs of weakness. Are there any signs of divergence or selling slowdown? No. So stay away. Again, the same line. Too late to short, too early to go long. Okay. IT, what about IT? Is IT the same thing? Yes, the same thing in terms of selling. Yes, the same thing in terms of the weekly, and very early signs of slowdown on the monthly. Very good looking long-term charts relatively. And like the FMCG, I have a level drawn on the weekly of IT. So my curiosity will be, will the IT find any kind of support from here? Which means the daily chart should give me some signs of divergence, some kind of a reversal. Is it there? No. So what should I do? Again, the same thing. It's too late to short. After a fall like this, it doesn't make sense to short. But are there any signs to go long? No. Again, you wait. So IT, pharma, both long-term charts, though being relatively very good, are going through a serious correction. I think there was one more sector in this, which was consumer durables. Yes, consumer durables was flat on Friday's trade. Now, okay, kind of a monthly chart, similar to the pharma, but the second leg of correction, if you call it A, B, C, this is the first leg on the downside, the second leg on the downside. It's been pretty sharp. Again, another sectoral chart which disappointed big time after the last good looking bounce back. Consumer durables, FMCG, auto, Bank Nifty. These were the four key sectors which bounced back last time. However, 100% of that is gone. Anything on the weekly? No. Anything on the daily? Now on the daily, I have a directional indicator and a momentum indicator, structural divergence. This is something we discussed some time back in energy. And we came to a point that, energy, if you see those stocks giving you a second leg move on the upside, you might look to go long. Consumer durables are just giving some early signs of that, very, very early signs of momentum improvement. So my, suggestion would be wait for the first move, an uptrend. Try not to participate in the first leg. Let go of the first leg. If it retraces and not retraces much and the second leg opens up, then I think it will make sense. So you can keep consumer durables in your watch list, prospective long trades. So what is essentially we are trying to do is creating our list where to go long if the market improves, where to go short if the market breaks from here, right? What are we left with? We are left with metals and realty. So metals, first realty, and where is metals? Okay, metals is down here. So realty has come down to a full circle. In the last 20 weeks since the market topped out, it was showing a bit of improvement, some strength. It did not last long in the leading quadrant and clearly it has come down. And the metal would be interesting because it has gone very choppy between the improving and the lagging. It's been very choppy. And you will see why so. I will show you the metals first, because metals is one sectoral index which is range bound and on the verge of breaking above the range. Let's take a look at a top-down approach on metals. The monthly charts are anyways weak. The weekly charts, after falling, the second leg of fall, first leg, second leg of fall, has gone through a 3-week consolidation. Do you see these three towers? See this? Positive, negative, positive, almost the same size, almost very, very similar highs and lows. So it is trying not to fall. Fell, bounce, fall, bounce, fall, bounce. So it's trying not to fall. This we can consider a sign of selling exhaustion. But are there signs of trend reversal? Selling exhaustion does not necessarily mean that buying will come. If I take a look at the daily chart, yes, buying and the trend and the momentum behind it has got in sync. So yes, some buying has come. In fact, the last week, this is one sector which has performed the best, and which has taken the sector back to its previous highs from where every time in the recent past it fell, which means it's on the verge of a breakout. It also means that it is at short-term resistance. So those who want to sell at resistances and buy on supports, the oscillator kind of trades, this is where you can look for shorts. However, being a momentum first trade trader, I will not suggest you to short metals at this juncture. It's a pack which is showing strength, has shown strength. Wait for the weakness to come, if at all. So metals, will it give the breakout or will it fizzle? What do I think? I would say it's important to respect this zone. How good is this zone? It's very good. It's a very trend determining zone level for the pack. So what you have to do in this kind of a case is you have to drill down to each and every stock, especially those who enjoys a maximum weightage, and see that if the breakout comes, from where can the breakout come? And if you think that no, there are no such charts which are showing this trend, then probably this chart will continue to oscillate within the range. So this is a completely trading sector at this juncture. My issue with this sector, before I finish off with the reality, is the range. The range has been pretty wide, right? So I'm going to stay away. I'm going to see whether the breakout comes or not. And to be honest, in this market sentiment conditions, expecting a breakout and then trading the breakout just doesn't make sense. I'll rather, wait and take those trades which are turning around than breaking out. Breaking out is very good for a bull market, not in this kind of a market. And finally, reality. Now, reality, as we saw the RRG graphs have come a full circle. So it's back to the lagging quadrant, weak quadrant, and nothing much from the monthly, weekly at all. Daily charts, just like the energy, just like we discussed in consumer durables, I have a trend, momentum, divergence shaping up, followed by some improvement. And so this is one pack. If it gives one leg up, a shallower retracement hopefully, and the second leg, when it breaks out this high, then it can be. So we have got three sectors which are showing potentials of a follow through. We have one sector which is looking like a breakout candidate, but it's the core, the bank Nifty, the private banks, which can drag the index down. I hope this was useful. Your job as a trader, as a positional investor, would be now to take a look at individual stocks, especially the top 5, top 10 names, and figure out where, from which part of that particular sector the move can come. Right? All right, so that's the sectoral and Nifty analysis like we do every week. Now my job will be to take a look at your doubts and questions.